So the better question is not why. Not because that's not a worthy question to ask. It's because I'm not going to be able to help you on that one. But the question is, well, then what happens, right? And like, what does this mean for us here in the United States? What does it mean for the rest of the world? What does it mean for your investments?
These are all really good questions, and I think, it's more than just Iran and Israel, right? Like, we've got tensions, obviously, that have been there between Ukraine and Russia, China and Taiwan. There's a lot of global conflict, right, that's kind of brewing. And like you said, I think we need to break it down to figure out, like, how does this actually matter to our investors? And what is really going on? Because a lot of people haven't even heard the news.
Yeah.
A lot of this is really recent stuff that's only happened in the last few days.
Yep, and I will give you a very unsatisfactory end to the show at the beginning, which is, what is going to happen? We can only guess.
Yep.
Right? But what do we as investors want to think about? Oh, I think there's a lot that we can unpack there. First and foremost being, is this, at what point should one panic as an investor? Right?
Yes.
My general answer to that is never. Right?
Mm-hmm.
Like, we should never panic. That is, it's like this ultimately pragmatic answer that's really unsatisfying. Like, if you're nervous about this is the least satisfying answer I can give you. But that doesn't make it untrue.
Can I mention something off topic for
Please.
you? We just had a live viewer join in on
Woohoo!
the show, so thank you to whoever that is.
All right, we got our first. So it is officially streaming.
It's live, and we've got people watching. So.
All right, well, what could go wrong? We'll find out.
It'll make the breaks more interesting, right?
It will, yeah. If you want to hear the stuff that's happening during the break, it should be coming through, because I think we've got the audio feeds from the cameras and everything are like live too. So.
Okay, but I'll get us back on track.
Okay.
So, we're talking about the Middle East. We know tensions are hot. What's really interesting, I think, is some of the language that's been coming across from some of the global leaders, right? And we just got news, I think it was yesterday, right, that Trump was removed from the G7 summit and brought back into the United States for security reasons. And in the Situation Room, Netanyahu was like, hey, we want you to join in on this. And what's interesting is it sounds like we have detoured one of our ships from the kind of Chinese waters, headed to the Middle East right now. And Netanyahu claims that there's been 2 assassination attempts on Trump directly from Iran. So there's a lot of stuff that's brewing, a lot of accusations that have been thrown around in the last few days. What are some of your thoughts on all of this? Talk to me about what kind of goes through your head when you see these headline articles. And it's trying to, I think what it's trying to do is promote a little bit of fear, right?
Because yeah. I mean, what's the first thing that goes through your mind? Holy cow, right?
Right?
This is going to be bad. Are we all going to war? Are we going to be in a war? So that's the first thing. And then I remember, this is sort of remember your training, right? And you will come back alive. So,
right.
And then I remember my training as an investor. And this is where, as a professional investor, and so I take a step back, try to take a breath and collect, and even in an environment that is stressful, start to ask questions through a different lens. Okay. The first question is, what would happen, right? So how does this go? So and that's kind of at a really high level.
So
say,
when
we go to war, we don't.
Questions. Do you typically like to look back at history and say what's happened in the past? Does that kind of give us an indication of maybe how things go in the future from here?
Less so than you would think from my vantage point.
Okay.
Right? Now, I think history is useful when you want to look at things like in historical periods of time when we go into warlike situations, right? What you see is negative market reaction very quick. But you tend to see the follow-on over the next 12 months or so where the markets are quite positive.
Right.
Okay? And so the things that I look for are, does this war having long-lasting and systemic impact? Okay, like how does it disrupt
And,
the
like,
global economy?
Where is the effect seen? I think
Right.
is the bigger question.
Well, and how long? Long lasting is important because anytime you destabilize the Middle East, you tend to have fluctuation in fuel pricing because so much oil comes from the Middle East, right? And that's such a substantial component to fuel pricing.
That's kind of what I wanted to mention. I found an interesting kind of stat on the oil, and we saw this, right? Like, all this stuff happened, and oil shot up like 10% in a matter of, what, 2 days?
Yeah.
So oil's already been affected by it. But kind of the bigger thing to think about is, yeah, we just struck an oil field in Iran, right?
Mm-hmm.
But the bigger implication, I think, past that immediate news is you got to look at where is oil transported, right, and where is it moving. And right now, 20% of our global oil supply is going through, and I can't even pronounce it, but it's the Strait of Hormuz, or however you say it.
Strait of, I think it's
Yeah.
Strait of Hormuz.
It's in the Persian
something like that.
Gulf, right? So for context, that is on Iran's southern border. And if you look at where everything's playing out right now, that is a major shipping lane.
Sure.
And if there's a global conflict and Iran is at war with Israel, that's kind of right in the middle of the mix. And so we could see some disruption, I think, on the supply side.
Incidentally, the cynic in me says, well, that explains why we have naval vessels moving in that direction.
Yeah, just to protect oil tankers
Well,
and make
not-
sure
no,
that
not-
everything keeps moving.
It's literally as a deterrent, right? You don't even go
Oh.
necessarily to do it. You go
Yeah.
to say, as a show of force, we are going to be present here, and we're not going to have this war, right?
Well, yeah, because Trump loves his cheap oil, and if you want to start messing with shipping lanes, that's a problem.
Right. And
Yeah.
so if you just think about the sort of foreign policy implications, and I'm no expert in this, but I'm just saying from the cheap seats, I look at this and think, oh yeah, send a deterrent. And if that emboldens China all of a sudden to say, well, we're going to start, flying sorties over Taiwan, then you go, all right, we've officially shown our colors as to how this is going to get played out.
So, talking about China, we'll jump around. I don't mind that. What's really crazy, in May of this year, China really escalated in their live drills. They encircled Taiwan with their military, and it really had Taiwan scrambling. They put up 62 jets and 23 warships in response to that military action. So we're definitely seeing right now, you go and look at the satellite images, China's expanding their force in that area.
Mm-hmm.
How much of it is just military training versus setting up for something? I guess that remains to be seen. But we do know that China's spending a lot of money right now on their military. A lot of money. And so they're ramping up.
Yeah, and I still look at that, and I have this tendency to look less at the implications of war than the implications of how supply and demand get altered.
Mm-hmm.
Right? Like ultimately, so I'm going to jump back to the oil thing for a second, right?
Sure.
Okay, so oil gets disrupted. Does that mean gas prices go up? And the answer is it depends. Because if we're going through what we're told is an economic contraction and consumption declines, all right, well, we've declined in supply and demand, which means the price may stay relatively neutral.
Kind of stabilize, yeah.
Yeah, and so that's the issue here is that what we are seeing, this is a multivariate equation, right? That's a real
it
fun
really
one.
is. There's so many
Right?
things that are at play.
When you say multivariate equations, what do you mean? That's some multivariate vacations. That'd be way better, right?
Mm-hmm.
No, a multivariate equation, meaning you have like A and B, right? It's not just like one letter in it. You got more than one letter in the equation. It's more
Yeah.
moving parts, more things to solve for.
Talking about moving parts, check this out. Did you know that, talking about Russia, that right now over 80% of their crude sales are now to China and India?
No.
Yeah, I mean,
I like the way you phrase that, too. Oh, by the way, did you know this random statistic that I
thing.
know you don't
So-
know? And I'm like,
just
go
fake
on.
it, dude.
I'm like, no, I didn't know.
It's crazy because the U.S. used to do so much oil trade with Russia, right? And so what we're seeing is
We're in the middle of civil war with sanctions involved.
I know. So all these global trade routes are being like
Well, so
rewired, and that's the big picture.
Okay, let's
talk
come back
about
and
the
talk
big
about
picture.
We're gonna take a break. Okay, I'm looking at the clock. We gotta take a break. I want everybody listening to hang on to this concept, right? You're saying like, oh my gosh, look at all the oil that's now going from Russia to China.
Mm-hmm.
What does that mean for the world? Okay, we'll talk about it because it may not be what you think.
Okay.
All right, stick around. We'll be right back. I'm Dave Littlejohn.
And Matt Dixon.
You got True Wealth on News Radio 93.9 FM at 1240 KQEN.
We're still stuck at one listener. How do we?
Probably at the office.
Maybe.
It's okay. You know, it's not going to happen all at once. We'll slowly collect.
Force it into submission, David.
Huh?
Force the viewership into submission.
Everybody go watch the show.
Yeah,
and go. Right. So
whoever's watching it, I feel like probably has one of our phone numbers. I want them to like text us right now and be like, "It's me. Admit who you are."
So I'm surprised we can't tell, like in the chat or something. But all right, I'm going to prep you for the next segment on this one, just so that this doesn't get you flat-footed. The issue with is that oil, in a sense, is fungible, right? Meaning, okay, if China buys it from Russia, does that mean that we're not getting enough oil anymore because we're not getting Russian oil? Or is it, well, no, it just means China's not getting it from Saudi Arabia right now, so they get it from Russia.
And we get it from Saudi Arabia.
And we get it from Saudi Arabia instead, right? So it kind of goes round robin, and it's the idea that, well, all right, it just comes out of another spigot where we get it from Canada, or, however else it works out. It does make for more interesting discussion around how the tariffs are going to be handled and how these are negotiation tools, right?
Yeah,
but this idea that, well, Russia only sells to China. Well, no, they sell a lot to China right now because they probably made the price favorable because they couldn't sell it elsewhere. So China was able to make a deal with Russia, and they're like, well, we'll just buy less from Saudi Arabia because we can get it over Russia for better. And Saudi Arabia goes, what the heck? And then the U.S. goes, it's cool, we'll buy it from you.
Jan fessed up. She's the one watching. She said we just had another person join too, though.
Well done.
Yeah.
So, this kind of stuff takes time to get traction. I've been doing this for a long time. And so...
Well, today's our first day.
It's our first day live streaming in a long time. So,
it is.
Good to see it's attempting to work.
Yeah. What was I going to say?
I wonder if we could have recorded and live streamed at the same time with OBS. All right. Talk later.
Okay.
All right, gang. Welcome back to the True Wealth Radio Show. Dave Littlejohn in studio today with...
Matt Dixon.
Matt,
yes.
If folks are trying to get caught up on this conversation, what should they do?
Well, they should go check out the podcast that's going to get posted tomorrow, or maybe even a video that they can go and rewatch.
Or you go get it live, and you could actually probably scroll back on it and catch the beginning. So we're streaming it live today on YouTube. So tell your friends and everybody else. Tell the people, you know what? If you hate the show, tell the people you don't like. Maybe they'll watch it, right? So hey, this is amazing. Waste of your time. Go check it out. Just kidding. Of course. Thankfully, our listeners are the smart ones. Right? And so I'm not sucking up to our listeners that much.
Where did we leave our listeners off?
We were talking about oil and the fact that Russia and China have been China's been buying a lot of oil from Russia. And what's the implication? Because my take is, as you were started saying that, it's like, oh, great. Well, now China and Russia are getting into bed with each other. And what does this mean?
It means we're getting better oil.
Well, it just means that the oil moves from other places, right? There's all these other places around the planet to get oil from.
We're getting that high-quality Saudi oil.
Well, you know where most of our oil comes from?
Right here.
Canada.
And Canada.
Yeah, we get a lot of oil from Canada, right? So, and that makes sense because you don't have to ship it very far, right? It costs a lot of money to move giant boats of oil around. So, that makes sense. So that's why I don't think that it's inherently like, oil is a problem because China's getting it from Russia. I think what happens is China's willing to say, oh, you guys are going to have some kind of sanctions on Russia, and we don't care. We'll buy it from wherever. We're mercenaries.
Yeah.
So that's how that works. But it does play into foreign policy now.
Sure does.
Right? And so maybe oil's not the leverage point with China for negotiations. And I think the leverage point with China is tariffs. Like, the United States is a huge consumer of Chinese product, and we're seeing China trying to be clever in game stuff. Like, I guess they're having a bunch of assembly done in Mexico right now. So it's like, well, let's shift stuff to Mexico, and then Mexico can bring it in through NAFTA, and we'll see if we can't kind of do an end around on the tariffs. And, the current administration is saying, we see you doing that, just so you're aware.
Yeah, that's pretty hard to hide that when you're moving so much product.
Yeah, well, and what it does is it puts Mexico in a difficult position of saying, like, yeah, we kind of did that.
Yeah.
Like, well, we'd like to be righteous about this, that, or the other thing. Like, nope, you're really not allowed to be righteous when you are trying to cheat on this thing, too.
Yeah.
Right? Everybody should be able to come across the borders unchecked. It's like, wait a minute, can we come across your borders unchecked? Yeah, well, tariffs. Mm-hmm. Like, no, you didn't answer my question. Right? You just obfuscated and deflected. It's like, it gets old.
Yeah.
Right? It just gets old when everybody plays this stupid game of, we don't talk about the bad stuff we're doing, only the bad stuff you're doing.
Right. So,
Whatever.
Yeah, a lot of rewiring of those trade routes.
Yeah, that's what it comes down to.
And it really, honestly, like, hasn't even hurt some countries very much. Like, everyone thought that Russia was going to get smoked. Right? Like, when the U.S. put all those sanctions on, and it's like, well, we're not going to do business with you. And it's like, you guys got to realize their economy only shrank like 1% when they invaded Ukraine. Like, in the following year after that, it's like, there was very, very little economic impact.
I think what Russia has, and it's really interesting, because I can't speak to Russian culture. I'm not Russian, and I wasn't there.
Yeah.
But there seems to be a different tolerance for, like, the grind. And a different, like, there's
like
no American
ethic?
dream in Russia. There's just like, this is just what we do to kind of make things work. And now it's everybody's going to war, right?
Mm-hmm.
And it seems to just be like, okay, well, that's what we do then. I guess we go to war. I don't know, but that's what it seems like.
Yeah, it does kind of seem that way.
Like, how many bodies are we going to throw at this war? And the answer is more.
Mm-hmm.
Like, whoa, that is a different attitude. We don't do that in America.
Sure
and that's why you don't have wars like this, right?
Russia's actually really starting to kind of take over Ukraine. If you look at it recently, they're starting to gain a lot of traction. They've already retaken a lot of the key villages that they were going into, and it makes sense though, right? Like, the U.S. has really slowed down weapons shipments into Ukraine.
Oh yeah, I mean, it was a proxy war for the U.S.
Yeah, like, those 8 packages were delayed. We were propping Ukraine up on, we were paying for it, and we're not really paying for it anymore, and so the tide has kind of turned.
Yeah, I don't understand the politics of this real well. I don't. I mean, I get the idea that Trump just says, can we just have peace on this one and not have fights anymore? And Russia's kind of like, we've invested so much in this that we can't give it back. And
Putin's not going to go down in history as the guy that lost. Right? Like, he's got a, like, he's older. Reports are he's kind of maybe sick. So like you just said, yeah, I don't think he's thrown so much at it. How do you back down now?
That's the issue that you get into with stuff like this, is what happens when a war is about pride instead of results.
Mm-hmm. Well, and also you got to think, like, Russia, Putin, playing a long game, right? Like, and, you hate to say it, but look at it, it's kind of working, right? Like, you're making progress. The U.S. is at a point now where we're not really backing Ukraine the same way, and
the U.S. has a legitimate challenge in front of it, and the problem is us, right? Yes, you guys listening too. The problem is we don't play the long game in the United States. We just don't. We play two to 6 year election cycles, so our politicians don't play for a long-term outcome or a cultural change. They just play for the next election. And if you don't believe me, go look at our national debt.
Mm-hmm.
Right? I mean, the level of fiscal responsibility and accountability in our government is virtually zero.
Yeah.
Right? Oh, we all pretend like it matters, but talk is cheap.
Mm-hmm.
Right? But apparently it's so are voters. Because that's all it takes is rhetoric, and somebody will vote rather than actual outputs and results. Because we just don't have the stomach to do the hard work.
Mm-hmm.
I realize, like, this is offensive stuff to love. There's a bunch of people listening that are like, I actually agree, and I don't know how we do this, but yeah, if we could get on a longer term plan, It may not even take as much austerity as people think, but we need to stop growing.
What's crazy is the hard work at this point is just quit spending so much money.
Well, that's what I mean. If we stopped growing, if we arrested the government at its current size, that's not backtracking, everybody, but that's saying we will not expand anymore, and we will grow the economy until it's capable of affording to operate.
Right, because our deficits. I showed you the numbers today on a chart.
It's unsustainable at the rate we're going, and everybody that believes in modern monetary finance, the problem is, if you're wrong, you've gambled everybody else's life.
Exactly.
Right? And that's the problem.
Explain that for our listeners, because I think I caught what you said. I don't know that everyone else did. How do you put this in a really simple way?
Bear.
Okay. But they need to know.
Modern monetary theory
They think free money just exists on trees.
It's the idea that money supply can be manipulated and that you don't ever have to pay back the debt. That all you're really doing is managing the economy a lot like a credit card payment, and so you simply adjust the money supply on a computer screen. I'll add or pull out of the economy as a matter of function, and by doing that, I can just manage debts, and I don't have to pay them back.
It's kind of like lumping your credit card usage. Like, I've got a credit card here and a credit card there, and I'm just going to kind of like...
It's kind of that, and it's kind of also saying, as long as I keep getting a raise at work, I can keep affording bigger minimum payments.
Oh, that's a good way to put it too, yeah.
Right, and so, but the modern monetary theorist goes even further and says, but what I really could do is just decide how much of a raise I got, or I can just change the value of the money so it's easier to pay it back. Right? And all I have to do is manipulate it within enough of a tolerance that the rest of the world won't quit on me, and I'm good.
And then you dilute the value of
the problem with that is that once you lose the faith and credit, then the only way you really can keep it is through military force. And if you and then what you're doing is you're if you're using military force to get it, then that's really unsustainable. Right? It's dictatorial in nature. It's we're a fake democracy, because as soon as somebody destabilizes that, like, it really is over. And you're also positioning yourself as a friend and foe, right? Like if you're going to make all the rules, you're just saying, well, we'll elect ourselves as king and then act that way because we have the biggest military. Anyway, I've overcomplicated the politics of it as well. But the modern monetary theorist simply says that there's no requirement to pay back the debt because we can simply adjust the values of the dollars in order to make the equation balance. And I would suggest that you're playing a game where real human labor was traded under the assumption of a value, and you saying that you can change the value of the dollars is equivalent to saying you can change the value of the labor. If you are willing to manipulate the value of labor, explain to me how that's all that different from declaring wage value and how that's different from slavery. Right? It's a really dangerous slope at that point. But so what you're saying is, I work for something, I've negotiated my wage value, but that wage value is totally arbitrary, and the government will renegotiate it on a whim.
Yep.
And I go, then how do you ever make a deal with anybody, because everything's been destabilized?
Right.
And they're like, well, we don't move it that much. It's like, yes, you do. We created 40% of all dollars in existence in the past 4 years.
Yeah.
So yes, you do.
Yeah.
Government, you totally do this. So, yeah, if you notice me getting chippy, that's what it is.
The question is, how do you really recover fully from that type of move?
So there is a real answer to this question. It's a great question. It's a theoretical and academic question. It's a question that I'll make you wait until after the break for, because we're at that time.
Don't make us wait.
No, I'll totally make you wait. We'll take the break. Cue the music. We gotta go, right? When we come back, you want to know seriously, how do we fix this?
Yes.
I will tell you. Okay? It's not as fancy as you think.
And you're not going to just say buy gold?
No, I will not.
Okay.
I will tell you. Stick around. I'm Dave Littlejohn.
And Matt Dixon.
You got True Wealth on News Radio 93.9 FM and 1240 KQEN. Here, Matt, fun game for all of our 2 viewers.
Yep. Jan said it went to 3.
3! All right, how do you fix this problem? I'm going to ask you first. How do you fix this problem, Matt? First, define the problem for me.
The problem is, we've got ourselves into... Where did my microphone go?
Great question. And is it on? Test, test, test.
Test. No, everything turned off.
What turned off?
Oh,
Your camera?
Oh no, camera's on.
Are
But
we hot?
microphone.
Bop, bop, bop.
Yours on. Let me turn mine on.
Oh no.
The camera mic still gets it.
That's true.
Let's see.
I was like, where am I?
Even better.
Okay.
Test. Yeah, we're both live.
Okay, so define this. So the problem for everybody that's wondering, right? What is the
Geez. The problem was we have a lot of money printing going on, and now the value of our currency has changed because we've printed too much money too quickly.
okay?
And the solution is you kind of do almost what Trump's done. You slow down the growth of the public sector and let the private sector have some time to catch up while reducing spending. And it might take a while for it to catch up, but you almost got to be patient because wages eventually have to catch up to the money printing, and that can't happen overnight. And what we've done is we've said, well, we'll just add government jobs and make those wages somewhat aligned with the money printing, but then you squeeze the private sector.
Really?
That's my shot at it.
I mean,
What do
it's
you
not
think?
bad. So the first thing is we're spending most of our money on interest.
Correct.
So what we have is a spending problem first.
Mm-hmm.
And the easiest solution to that is to grow your economy faster than you grow your spending.
So back to quantitative easing.
No. Because quantitative easing is money printing. That doesn't fix it, right? No, it's actually about austerity, but my suggestion is austerity is untenable, right? Like rolling programs back. Okay, eliminating waste, fraud, and abuse, we all agree with. The problem is we can't agree with what it is. Because all the people that are getting payola from the government want to get it.
Mm-hmm.
Right? I mean, they're perfectly content to fleece the taxpayer and enrich themselves.
Yeah.
Right? And how do we know? Because they do it.
Well, it's an unfavorable one, but the way you really solve a lot of the issue is you get rid of the court systems because they're the ones that are sucking all the money that then drive the politicians in D.C.
I can't go there. That's so no, that's too aggressive, Matt.
Okay,
That's
all right.
Welcome back to the True Wells Show.
Got him, David. Got him.
We left on a bit of a cliffhanger, and so Matt, remind our listeners where we're at here.
Yeah, we're basically saying there was all this money that was printed, and now we're trying to kind of solve this issue of like
How do you
we
fix
have a
the debt
spiraling
problem?
debt problem, right?
Yeah.
Like we saw a chart today that showed that the spending on just the interest at the federal level has now surpassed our defense budget.
Mhm.
So like we're spending more on interest than our own military, and it even surpassed healthcare costs, right? The only thing that it hasn't surpassed is ding 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 Social Security. Like our Social Security budget is massive, but what's crazy is if you look at the trajectory, we're on course to make interest payments from our debt be the number one expense this country has, probably in the next 2-3 years at this rate. So you asked a great question at the break. How do we come back and fix this horrible situation that we've got ourselves into? And you asked me that on the break, and I was like, well, it's a slow road to recovery. We need to, and I kind of explained it as, hey, we got to let wages kind of catch up to this thing and not spend so much on the government level. You had some other ideas. Do you want to talk about it?
Oh yeah.
I have opened up that can of worms. Give it to me.
All right, so let's kind of put some numbers to this. The U.S. government spends about $7 trillion a year.
With
Ish.
a T, not a
With
B.
a trillion, yeah.
Okay.
It collects in taxes about $5 trillion.
We're running a deficit of $2 trillion.
$2 trillion on a $5 trillion budget. So we're running a 40% deficit.
That doesn't even seem possible, really, honestly. that you could take in that much money but spend that much more.
Yeah, I guess 40% tax deficit.
You're
right?
welcome, Ukraine.
Yeah, so we're actually about 30% budget deficit, but 40% shortage in tax revenue. If you look at that and go, well, then what's the pathway forward? Then there are two things that you can do in any entity in order to balance the budget, right? You can reduce spending, or you can increase income.
Right.
Okay? And so this is the great argument for both sides. Is, well, we just need to tax people more. And then the other side says, we just need to spend less. And then people trying to pretend to be in the middle of the road are like, we need to do a little of both.
But to go from 5, to be able to just break even, right? Like, let's just look at easy numbers. To go from 5 to 7, you got to make $2 trillion more. And if you came at it from the angle of let's just tax people 40% more, we're already being taxed at a rate of what?
So our total economy produces about 28 trillion. So tax revenue is roughly 18% of that. The debt is 34 trillion. So our debt exceeds our total economic output. Roughly 1 out of every $5 gets paid in taxes, and it's 40% short of what the government is spending. And we're measuring in trillions. So when we what happens is the numbers are so staggeringly big, and most listeners are not listeners, taxpayers, like citizens, right? You guys listening, you're learning right now, right? Some of you already know this stuff. What people miss is that this is so staggeringly large that your eyes roll back in your head, you foam at the mouth a little bit, and then you just shake it off and go on like everything's fine, because does not compute, right? Like the numbers are too big, they don't compute.
Where did, it'd be really interesting to look, and I know this is probably information that you could find, but like, where is the bulk majority of this debt held? Like, who do we owe it to? Like, where...
It's all over the place. The problem is that this doesn't even talk about unfunded liabilities, right? Like the future bills for Social Security and Medicare and Medicaid are so staggeringly big, and they're not on the balance sheet. It's like the numbers are impossibly huge, right? And so that just looks at this and you're like, what have we done, right? And so, but I told you I'd give you an answer, not just lay out all the problems. Okay?
Solution
Here's
time.
really what needs to happen. And I'm trying to give the most highly probable pathway to success, okay? And it is, so from a tax perspective, the tax code needs to be simplified, not made more complicated, right? We need fewer exemptions, not more. You can afford to have a lower rate, but you need to have fewer administrative ways to finagle your way out of paying taxes or expensing things away in creative ways. Okay, this is the idea of like, well, I bought 37 Hummers because that was the way to like not pay taxes. Okay, and I bought 16 helicopters or something ridiculous. Like that's just not the right way to balance this. Is to let every business out there just expense and accelerate the depreciation on expenses, so that you're like, well, that drives the economy. Yeah, but it doesn't fix the real problem at play here, right? What we need to do is stop government spending from increasing, and the way that you do that is you create a line in the sand that says, this is where we're at, right? And if you really want to get aggressive, you pull a Warren Buffett style plan, which is like, okay, everybody, if you can't balance the budget in Congress, then you're ineligible for re-election.
I mean,
and you're like, what? Yeah, that's right. If you cannot produce a budget that's balanced, you are ineligible for re-election. Okay, and I would extend that even a step further that says if you can't balance it within a rolling 3-year period, that bureaucrats may be in the same position. You can't stay in your job if you can't balance your budget.
It's so mind-blowing when you get into the numbers, right? We're in the numbers right now.
Yes.
And then people squawk at the idea that Trump's saying we need to lower the amount of money that we're spending. Right, because if we're spending
what we hear is
$7 trillion.
Every person that's on Medicaid, they're going to lose their health care or something, and I go, so the problem though is why is health care so expensive that nobody can afford it in the first place? We're not addressing that.
Right.
We're addressing like, well, everybody has to be on a government assistance program because health care is too expensive. So the solution is more assistance, not fixing the problem.
Right.
Right. This is not a right-left thing anymore.
No.
This is an economic sensibility thing, and like how do you address problem management? Right. So you have to arrest the spending increases, and then you have to create enough velocity in the economy for it to grow to the point that tax revenue can pay for government. And then you need to go further than that, which is you need to allow it to grow to the point that we can pay down our debt on a sustainable pathway. Okay?
Yep.
And not just
Lower
make minimum
spending.
payments. You actually need to get back to where you maintain, and the way that you address something like this is you put in place a maximum ratio of debt to GDP. Okay? And that also solves the government's problem of like, well, this year we need to spend more in order to do the economy, this, that, or the other. It's like, well, okay, if the government spending really does accelerate the economy, right? And if it's wrong, guess what? You don't get reelected. There needs to be real consequences for this stuff. You cannot have career politicians that embed themselves in an ecosystem where they are immune to the effects of their decisions.
Right.
Okay?
Yeah, 'cause
and
if
you
it goes
cannot have bureaucrats
unchecked,
in the same way. You cannot have a bureaucracy that's immune from the impact of its decisions. Okay? That's just not real life. The private sector feels the impact of its decisions. The public sector must as well.
Absolutely.
Okay? This is not about a conservative or a liberal or a progressive or anything else or libertarian view.
It's just an
this is an
economic look.
economic view of how these problems need to be addressed.
Mm-hmm.
Okay? And so that's the part. Now, the problem, of course, for everybody listening is this is a fun political rant, isn't it? Right? Or it's a fun, it's
I don't even know
quasi-political.
that it's like political. It's
Yeah,
just
what
look at
a
the
fun
numbers.
economic rant. And everybody goes,
Yeah.
but what are you going to do about it? And the answer is less than we'd like because there's just not the political will.
Mhm.
There's just not.
But as investors, there are things that we can kind of look at and learn
That's
from.
the thing.
And just say, well, how, if this is our situation and this is our reality, how do we invest around this?
Yeah, how do you navigate a crappy situation? Because the only person that you can really improve the outcome for is yourself.
Well,
Okay? It sounds really selfish to say that. I'm not saying be selfish, but I'm saying you got to be smart when people around you aren't going to be smart.
well, and it all depends on, like, you know, how long are you going to be invested for? Are you a trader? Are you an investor? Like, where do you land on that ecosystem? Because, you know,
I think you're asking several steps down the road though when you start
Yeah.
talking about. I think that we can like take a step back and say, okay, let's assume that the game is largely being played poorly economically.
Mhm.
The advantage that we have is the ship is so big that even if it's sinking, it sinks really slow. Right?
yep.
It turns really slow. But within that means because the ship moves so slowly and you can move faster, you still can create opportunities in this environment. That's what I want to talk about.
That's true.
Okay? So we should do that. But as I look at the clock, I realize if we take our break now, we have a better chunk of time to help our investors figure this out.
Are you going to give them the magic sauce?
We're going to try.
Okay, let's do it.
If there was magic sauce, yes, I don't think that's what it is, but we're going to give you, some tidbits that are useful. So
Sprinkle
stick
some
around.
fairy dust in it.
All right, I'm Dave Littlejohn.
And Matt Dixon.
You got True Wealth on News Radio 93.9 FM and 1240 KQEN. All right, are we still at 3? Maybe not. Down to 2, down to 1.
It says 1 on mine, but Jan's got the good number.
Official count.
Yeah.
People come, they go. They don't stay on it the whole time. We'll end up watching this later and be like, boy, the audio was terrible. What did we do?
Until the second half of the show. And, it's
And
like,
then,
gosh,
then
such
we plugged in
clear
the audio and it was way better.
Mm-hmm. It's a work in progress.
Yeah. This subject gets me so fired up because for a lifetime I've watched everybody just sort of complain but then vote the same way again and again and again. It's like we keep voting in people that do the exact same thing. They just deficit spend and blame the other guy.
Yeah.
Or gal, right? As it may be. But it's like that's just the method. It's like, well, let's get elected and then blame the other party.
Yeah.
And like that's the best we got.
Mm-hmm.
And I'm just, how dumb is that, right? Like, why? How dumb is it that we can see the solutions, we just won't do them, right? Like, why does it hurt so much when I bang my head on a wall? It's like, if you consider stopping, it's like, well, I know that would help, but I just can't. Okay, then you're on your own. What have you discovered, Matt?
I discovered that
You see this? I make him narrate during the breaks now because it's live. Like, if you're just watching us in a live stream, how dull is that?
yeah. I've discovered that tonight is pizza night because Abby's is offering a $24 giant pizza.
I see.
Mm-hmm.
Is that like your jam then?
Dakota Street, I think, is better.
Like in Sutherland?
Yeah, barely, but a little bit better. But Abby's, they're running a great special today.
I'm not a pizza connoisseur.
What?
That's the thing.
Really?
I mean, I know the pizzas I like. Some I like more than others, but
Like,
yeah,
what's
I'm
your
not.
favorite pizza? Barbecue chicken?
No, I'm like
Really?
so straight down the fairway. Just give me a pepperoni and sausage with like some, yeah, and I'm pretty happy.
Not a real fritzy.
No,
you know,
just like I'm just
frilly
simple.
pizza.
It's like really like cheese and meat. You're trying to like we don't have to mess
anchovies
that
and
up.
Pineapple.
Golly, stop it now. Welcome back to the True Wealth Show on the home stretch where you wonder what we talk about on the breaks. It's now officially streaming live on YouTube, so you could actually listen, and then you go like, I expected better, and I'd be like, I know.
I just want to know what everyone's favorite pizza is.
That's like
You
talking
might-
pizza, and I'm like, we're talking federal debt here, and you're like, I just really want a pizza.
I'm about to go into debt for pizza. Let's
Dude,
go.
Negative, Ghost
Yes.
Rider. That is.
Swipe that credit card.
That
and
is
give me
not
that
an
pepperoni.
investment other than in terrible health habits.
You know, it lubricates things, right? Like all the oil on top of the pepperonis, that keeps the joints going.
You know, I got nothing. Just
Yeah,
how
some
do you
people-
how am I supposed to respond to that? Be like,
Some
you know
people,
what?
you know, they take their fish oil supplements, whatever.
It's like, no,
eat
just
the
bring out a pepperoni.
Yeah, get on it. What are you doing with your life if you're not hitting up the pepperoni pizza?
It's actually a really fair question. So,
Yeah.
you know, it's about the time when you say like, no, I want a pizza with no cheese on it or this, that, and the other. I said, you better be like lactose
If you want your
intolerant.
fish oils, just throw some anchovies on top of that thing and get to work.
I can't remember the last time I'd had anchovies on a pizza. I can't remember the last time I've had anchovies, honestly.
Really?
Like, I think I tried them in high school. I remember they were very salty.
Mm.
That's about it. That's all I
Yeah.
got. So, okay, look, you guys did not
How do we
stay
loop
tuned in for
anchovies
pizza.
Into
We
the
don't.
rest of
We
this
just
show?
abandon that topic and move on. Like, Just
Okay.
let it go. We are trying to help our investors, like all of you guys out there that are listening and you're trying to be investors. It's like, how do you navigate some of the nonsense out there right now? And so, like the debt, for example. The
Yeah.
first thing I would tell you is, it's probably less effective than one hopes to be a significant investor in things like gold. I'm not making a recommendation. That's super important that we talk that way. Like, I'm not giving investment advice here, but I just want you to consider the fact that gold is an inflation hedge, but in order to protect your purchasing power and grow your purchasing power, you need something that will do things too, right? Companies that produce things in the economy add value to the economy. That's why they grow. Gold is a finite and stagnant number for the most part. Maybe they're mining a little bit more of it, but not a lot more, which means it's a good stable value, but it tends to reflect the value of the currency. If currency is inflating, gold goes with it, but it doesn't mean you're improving your purchasing power. It should just be sort of holding its own. In rare circumstances, gold can catch kind of a market bid where people bid it up in a bidding war, feeding frenzy. It's kind of like being in an auction at that point where something goes for more than it's worth just because somebody got a little,
It's the flavor of the month.
yeah. So they just started bidding too aggressively for something, and later on when they're come off of whatever beverage they were drinking that was influencing their judgment, they're like, maybe I shouldn't have done that. But it is what it is. So
Tell me how you really feel.
well, that's the issue with gold. So then you look at what are the things that you need to be aware of? First of all, let me consider something really radical here. Those of you that say the United States is like cruising for catastrophe and it's going to not be the United States one day, you could actually be right. Okay? But what I would still suggest is we actually beta tested something like that in this country in the early 1800s, right? During the Civil War, right, in mid-1800s, we actually had a group of states that attempted to secede, create their own currency, and it failed. And then it all had to get repatriated back into the country, and all of those goods had to get repriced back into dollars, and they did. Assets have a tendency to be repatriated into whatever currency survives. Okay, so I'm not saying run off and buy Bitcoin or any nonsense like that. I'm saying owning assets historically has been a good way to protect your purchasing power and to even hedge against currency instability.
Mm-hmm.
Right? That's the thing.
That's probably why a lot of people have been running to gold lately, right? Like the U.S. dollar got this crazy high, valuation compared to its historical average, and now the dollar's kind of starting to soften, and it's like, that's probably why so many people have pushed into gold. I think it went over $2,400 an ounce.
Gold's been pretty high at different points.
It's been going nuts.
But again,
it's a global push though. Like China wants it. I think it was like 2 tons of gold that they've accumulated and put in their, central bank, and it's like,
yeah, which fits in like one pallet.
Right. Yeah. But
not even a whole
maybe it was
pallet.
2,000 tons. I don't remember what it was. It was just a lot of gold. That's what I remember. And they're trying to link their currency to gold, like we used to do. But yeah, I mean, like you said, there's things will reprice. It's just around what.
Right. And so I have a tendency to like to be invested in things that are still economically relevant, that tend to be globally useful, right? Again, these are not recommendations for you, but you just look and say, well, where do we see like cross-country commerce occurring in things that people really need?
Mm-hmm. Or in areas that just keep getting the money, right? Like what companies just continue to get paid.
Yeah, and these trends evolve. Over the course of my career, I remember dot-coms, I remember real estate, I remember the BRICS, right? Mm-hmm. Brazil, Russia, India, and China, and the emerging market trades.
You know what's crazy? Yeah, and it's like the flavor of the week sometimes, right? Like no one had been talking about energy stocks much over the last year or two. Everyone's just Nvidia tech.
Right. Well, the current trade has been artificial intelligence, right?
Right, yeah.
We had electric cars a few years ago.
Mm-hmm.
We had 3D printing about 8-9 years ago.
Yeah.
3D printing was going to be the thing, and it went up like hundreds of % in a year or two.
Now no one's even really.
Yeah, it's just like, now it's like
more
whatever.
like a novelty. Like one of the big universities printed a 3D boat,
remember,
and everyone's like, cool.
I remember GoPro cameras when they first came out, and the stock went bananas.
Oh, really?
Right? And so it was just a household name for a little while.
Yeah.
And now the question is whether or not they even survive because there's so much competition in the marketplace.
Yep.
Right? And so, like, you're great, your camera's got your name on it, but does that make it superior?
So would you say you almost like to look at the bigger, large-term trends? Like,
of course, if you're an investor.
Yeah, right?
I mean, ultimately, there are principles that don't change, right? Ask yourself, does a war actually end the economy?
Well,
and if it does, then does your money matter?
Right, but there might be some winners inside of a war, right? Like, you look at defense stocks lately, and they've been kind of going up at a pretty good clip.
They
right?
have, and it's the thing is, it's attractive to try to game these events as if there's a wave of trend that if you could somehow stay in the sweet spot, you just get in the curl and it's the perfect wave and it just drives you ahead of everybody else and you leave everybody else behind,
well,
and it's amazing.
Don't you know there's a way to be always on trend?
I do not. And after 25 years of trying, I'm confident saying that I'd rather be 80% right 80% of the time than 100% right 20% of the time.
The Reddit boards and the meme stocks, Dave.
You are doing such a great job for our
I'm over here
listeners.
poking the bear.
You got to decide, are you an investor or a trader?
Right.
Trading seems so sexy,
Until
but
you
it's
lose.
well, and that's
right?
the thing. Like, people don't like to talk about the losses.
No.
Investing is a matter of having a healthier long-term perspective and not being shaken by the short-term stuff, right? If the world comes to an end, your money never mattered.
Right.
It just doesn't. If it's the end of the world, this is the guns and whiskey trade. If it's not the end of the world, then this stuff recovers, in which case these are all buying opportunities. And that is the reality of things, is that if things continue to work as we understand them, then investing over time becomes more valuable. If we have a wholesale systemic change that alters the course of history and how the economy acts, then we can reevaluate.
Sure.
But I just don't see the principles of investments changing. I see the tactics, but not the principles.
There it is. Hey, that's great. can we like frame those words somewhere? What if someone's listening to this and they're like, man, I was all worked up, I was scared about the world, you made me feel a little bit better, and I want to talk to you about maybe managing some of my money because I don't want to be emotional, I want someone calm, cool, and collected. What do they do?
They call Matt.
That's right. That's
Now,
right.
you know what? If you just want a second opinion, give us a call, 541-375-0898. You can check out our website at littlejohnfs.com, and you can also email at info@littlejohnfs.com. But that's music. We got to run. So until next time, I'm Dave Littlejohn.
And Matt Dixon.
You've been listening to True Wealth on News Radio 92.9 FM, 1240 KQEN.
You know, I was watching our connection over here, and it stayed excellent the whole time.
We'll take
So,
it.
We've
All
got
right.
a good stream.
Do we like wave goodbye? Do you turn it off?
Yes. Peace.
All right.
And then somewhere in here, in the stream, stop recording.